First of all, thanks everyone for joining. It's really nice to see you all in person here again. My name is Jeroen. I'm a partner at Speedinvest and one of the co-organizers of the event. And I have the honor to welcome you all here today in Berlin, which for a change is actually very sunny. So very glad that we made that happen. Before we get going with the official program, I wanted to figure out who of you has been to one of our previous marketplace conferences. So maybe we can do a quick show of hands who has been at one of our events. Oh, wow. That's actually pretty good. It's like 30, 40% or so, so pretty good retention, I would say. I think for those of you who are new to the conference, I just wanted to share a little bit about why we are actually here for, right? So we started the Marketplace Conference ultimately back in 2018. It'd be great if you can put on my slides. There we go. We started back in 2018 when we organized the first edition in San Francisco. And the reason for doing that was that because we felt there was no real event catered towards marketplace entrepreneurs. You know, if you were building a SaaS company, there was SaaSter. There were quite some events for fintech companies and even crypto. But there was no real event for marketplace early stage entrepreneurs. So that's what we set out to do. This event is all about connecting, about learning from other entrepreneurs' journey, about sharing the story of how you build your marketplace. So I would also really invite you to not be a stranger today, introduce yourself to everyone else in the room, tell liberally about what you're building, how you're building, and why you're building. Because I think that is ultimately the best way to get the most out of today. This is, by the way, our 9th edition of the Marketplace Conference, but it's the first time we actually do this thing in a truly hybrid fashion. Like I said, we started in San Francisco back in 2018. 2019, we also had in-person events, but obviously for known reasons, the last 2 years, we were forced to only host the conference virtually. And I'm very happy that this year we're actually able to do it in a truly hybrid fashion. So next to all of you here joining in person, we also have a bunch of people joining from the comfort of their homes or their offices. So also for those people who are watching, hope you have a great time, hope you enjoy the show. And it's lovely to have you. But for me personally, this here in person is what really brings, I think, the most joy and the most knowledge, right? So I'm really excited to see this whole room of marketplace entrepreneurs, and it's great to have you here. Now, of course, running an event of this scale is not something you can just do by yourself. So I want to shout out to a couple of teams that have really helped us in shaping this event that's happening here today. First of all, we're very keen to partner up with FJ Labs for the organization of this year's event. FJ Labs has been around for many, many years, backing and building, I think, incredible marketplace companies. And they've also been a true contributor to the Marketplace Conference from day one, as they also had a couple of sessions that they hosted all the way in San Francisco. There's quite a few of them here at the venue today as well, so make sure to connect with their team. I think they're great investors, so make sure to say hi. On the same note, I want to say thank you to our event partners. We have Adyen here, see them in the room. We have TrustShare and AWS. And I think you all know that if you want to build a marketplace business, that is usually a very tricky thing. And you really need the backing and support of companies that want to help you on your journey. And I think these partners have really shown for quite some years already that they are one of those trusted partners. So make sure to connect with the people from TrustShare, from AWS, from Adyen, also here during the event. And from my point of view, I just want to say thank you. Your contribution is very meaningful. It's very important. And frankly speaking, if it wasn't for your support, then we would not be able to organize this event here today. Before we get going with the, let's say, the real program, just a very few housekeeping thingies. So As you might have seen, we have 3 stages. This is the main stage. We have the networking stage at the end to the left. And then after lunch, we're actually going to open up the metaverse, which is essentially the stage for speakers that were not able to join us in person, but still wanted to share their valuable time with us virtually. So make sure to check out that room as well. I think we have some great speakers on there. They're dialing in all the way from the US. So hopefully that will be some great content for everybody in the room as well. Secondly, there will be plenty of food throughout the day. You already saw we had a bit of a breakfast. There will be some lunch served later today. We'll have cakes and there's popcorn. And at the end of the program, we'll actually have some nice finger food around 7 o'clock or so to wrap things up before we enter still 2 hours of networking where we can further connect and build those relationships. At that time, we also, by popular demand, brought back our DJ. So we have a DJ from like 7 to 9, a little bit Berlin style, so it should be fun. But then once you decided to leave, make sure to also pick up one of the goodie bags at the coat check, because we of course want to make sure that you leave not empty-handed, but with something nice as a gift from us to all of you. Good. I then also have the honor to provide you with the first opening session. And we thought it would be helpful to share a little bit about what happened in the marketplace industry since the last time we've met, roughly 12 months ago. And for that purpose, together with our team, we put together some very basic slides that give like a high-level commentary on this journey. At the same time, we also added a number of takeaways, which I think could be helpful for you when you're actually building and crafting your marketplace business. So let's get to it. Maybe very briefly, I already mentioned, I work at Speedinvest. We're a mostly pan-European venture capital firm. We have been around since 2011, and we like to partner with startups in the very early stages. We typically invest anything between 250k euros up to 2 million, and we have a portfolio of more than 250 companies by now. And we actually invest from 6 different sector-specific investment teams, of which our marketplace, who are all here today, is one of them. For today, most importantly, you should know that we simply love marketplaces, and we've been investing in them for many, many years. We have roughly 50 marketplace companies in our portfolio right now. We're still adding about 10 to 12 every year. So in case you're building something new and exciting, make sure to check us out. We are very happy to get to know you and potentially partner with you on your journey. Now, in order to make sense of what has happened in the market over the past 12 months, I thought it would be helpful to start talking about what actually happened in the public markets. For the simple reason that whatever happens in the public markets usually trickles down to the private markets as well. And as you know, before the end of last year, so before Q4 2021, we have been on this incredible journey, right? On the slide here, you see the development of the NASDAQ, essentially since the end of the global financial crisis back in 2009. And you see that we've been on an amazing bull run that lasted for more than a decade, where the NASDAQ in general grew by more than 12x. Now, if you double-click on that, and you actually wanted to look into, okay, but what about public marketplace companies? You can see that the performance of the public marketplace companies has, on many occasions, been even much better than what we saw in the NASDAQ. So here on the graph, you see the marketplace index. For those of you who have been at the previous marketplace conference, you know this is termed by this term is coined by Battery Ventures, and it currently holds the top 65 leading public marketplace companies that have a market cap of more than 500 million each. And you see that over the whole decade, or the whole period that we just looked at the NASDAQ, you see the marketplace index even outperformed the NASDAQ by quite a margin. And I think this incredible bull run also trickled down to the public markets. And I think we saw the epitome of that in 2021, when many private marketplace businesses raise these huge financing rounds, right? I mean, we've seen a lot of them, and they were like bonkers, effectively. Right, so on the slide, you see a selection of huge financing rounds being raised in 2021, and it all looked like times were great. Now, I'm not telling you anything new by saying that, of course, after Q4 2021, so roughly 12 months ago, things really changed, right? Effectively, we went from an incredibly long bull run to now a recession in the US, a very near recession happening here in Europe as well. And this also translated into the development of the Nasdaq, as the world's leading exchange for technology companies. And since November, end of last year, to now, the Nasdaq went down with more than 30%. Marketplaces, if we again look into the marketplace index, actually went down even more. They went down by 40%. And perhaps even more telling, a lot of the amazing marketplaces that IPO'd back in 2021 lost significant value compared to the market cap that they had at IPO. So here's a selection of the marketplace businesses that all IPO'd last year. And you can see, for instance, that Coursera lost 60% of its value compared to their price at IPO. Deliveroo and also Robinhood lost close to 80%. And Auto 1 here from Germany lost close to 90% of its value. And even more like household marketplace companies like Delivery Hero, they were facing similar situations, which actually led the co-founder CEO, Niklas Osberg, to tweet, we now got about the same share price as we had 5 years ago, the only difference being that we're now 17 times larger and our majority of our business is highly profitable. Now, the proof is in the pudding on whether these companies are currently priced accurately by the public markets, right? However, I think the important takeaway for you here is that public market investors currently totally differently price marketplace assets as they have done over the past couple of years. And you can see that in a bit more detail when we look into the development of price earnings, which is widely known as kind of like a valuation multiple for public companies. And you could see that especially in the last 2 years, so between 2020 and 2022, the price earnings ratio that we awarded tech companies was actually significantly higher than the average price earnings ratio that we have seen between 2008 and 2018. So ultimately what is happening is that in the public markets, assets are priced differently. And this, of course, also starts to translate into the private markets. And together with my team, we try to look a little bit into the data. What has actually happened with VC activity? And if you look at the amount of capital being invested in startups in the last quarter, so the one that just closed by the end of September, you see that it's actually down more than 50% year over year. And if you look very closely, you can actually see that most of that contraction has happened in the later stages, so everything beyond Series B, with effectively everything from pre-seed to Series B staying roughly the same. Now, I personally think that the main reason for that is that the adjustments of public market multiples simply made later stage investors reflect and pause on their own strategies, thinking like, hey, what have we been doing over the past 12 months? We've been investing in all these crazy valuations, but we now see that these public markets are paying very different prices, and they decided to wait it out a little bit. And that's effectively what we see here on the chart. Now, similarly important, you also see that the amount of financing rounds that are happening have decreased by 30%, which means that obviously less companies are actually getting funding these days. Also here we try to double-click on how is this actually for a marketplace company specific, and you can even see a larger decline. Now this decline is 70%, might be fueled by some individual cases of course, but you can see that the picture is quite similar, right? 30% less financing rounds being happening, and a huge contraction in capital, mostly in the later stages. And as a result, you see a lot of these large yet private marketplace businesses scrambling to adjust. Either they try to extend the runway, they make layoffs to make their business more efficient, maybe they wait with the IPO before they get to some sort of like profitability. So there's a lot of changes happening effectively. Now, this all looks like quite a dark and gloomy picture, I realize. So I want to start the day a little bit lighter than this, but I still think there are some important takeaways for you as a founder to take home from this news effectively. First of all, I think we should all realize that we're facing a new reality, and that by now the growth at all costs mantra, who has really lived for many, many years in the VC industry, seems finally over. I think it's very important as a founder that you really come to terms with this new reality, right? And you don't have to become a pessimist, but I think as a founder you should at least be a realist. And I think if you don't really incorporate this new reality into your own strategic thinking, you might end up getting quite disappointed, right? So if you go out now on the market and you try to raise with a similar valuation multiple as you were getting 12 months ago, you might end up getting disappointed. Similarly, if you go out or you decide to wait for fundraising because you expect the markets to bounce back, you still might end up getting disappointed. Now, of course, you have to take this all with a grain of salt. I mean, you've seen this before. VCs have said it before. And as you know, VCs are like terrible fortune tellers. I mean, it wasn't too long ago that we actually had COVID and all the VCs were saying, buckle up, it's going to be a hell of a ride. Well, it kind of like was a hell of a ride. It only just went up and to the right the whole time. So, take it with a grain of salt. But this time it does feel different, right? We now see the contraction in the public market that we did not see for the past 24 months. So try to incorporate that into your planning. Now with that also comes the question, should I focus on growth or should I focus more towards profitability? And I think this is a very important question that actually many of our portfolio companies are also asking us. And I don't think there's like a clear-cut answer here. I think it's often very specific to individual companies. But I think this graph that we borrowed from our friends at NFX is actually still largely applicable. It says that in your early stages, your number one priority is still to grow your business. However, as you mature, you need to show a path to profitability. And maybe you first start to do this on a relatively small scale, maybe for a specific customer segment or a specific geography. But ultimately, you need to show that this profitability will also happen on a company level. And I think that's fundamentally a good thing. Now, the second takeaway, I mean, you've already guessed it, is that obviously raising money right now has become significantly harder than that it was 12 months ago. And I think for those of you who are fundraising or who have been fundraising in the previous months, you probably felt it in some form or shape. I mean, I only invest in early stages, seed stage, and as we have seen, that is actually the least affected sector, I would say. But even for me, it feels different now than how it felt 12 months ago. I think where 12 months ago we were like slapping term sheets without doing any due diligence, we now actually have a bit more time to get to know you, get to understand your business, and build that connection before actually investing. And I think from my side, that's a good thing. But for you as a founder, this is obviously very different. At the same time, I think it's also important to state that there's still a lot of capital in the market. VCs always talk about this dry powder thingy, Essentially, this is capital being raised by VCs that still needs to be deployed. And on the graph behind me, you can see the amount of capital that is currently in waiting mode in the US, which roughly accounts for 290 billion. So the good news is the money is not gone. The money is there. It will need to be deployed, and it will need to come to market at one point. And anecdotally, from the conversations that I'm having with later stage investors, they basically say, we've been fairly quiet over the past 12 months, but we're actually really keen on getting back to investing. So Small prediction here. If nothing else goes wrong in this world, hopefully there will be more money coming to you guys in the next couple of quarters. Thirdly, and kind of like the silver lining, is that although we saw a decline in investments in general, although we saw a decline in marketplaces as a topic, if you look into where the money has been allocated in 2022, you still see that marketplaces are right up there. We're just trading fintech. And for me as a marketplace investor, that's obviously very logical that we're still here. Because marketplaces are built on these magical network effects. And network effects are known to be driven tremendous value over the past decades. And public companies like Apple, Amazon, Facebook, or now Meta, Google, Microsoft, those are all part of the top 10 most valuable companies in the world, and many parts of their business model actually rely on these network effects. So network effects, still a very hot topic. Keep building them. Fourth takeaway, yes, we saw a decline on these mega rounds being happening, yet at the same time, they are still here. It's still happening, maybe not at the scale that we were used to before, that we used to see back in 2021, but they're still happening. So on the slide, a couple of financing rounds that were announced this year. Now with some of them, there might be a time lag. Maybe the money came in end of last year and only got announced later. But I know for a fact that some of them actually really happened throughout the mid of this year. And I think that's a really good thing. It ultimately tells you, if you're building a great marketplace business, VCs are there to back you all along the way, regardless of what the economic climate is about. And finally, my fifth takeaway, which might sound a bit like contradictory to the whole presentation, but it might be a great time to actually build a business, or more specifically, to build a marketplace business. If we look into the historics, you see that many of the world's leading companies have actually been built on the back of a recession or a crisis. Google was launched in 1998, basically at the start of the dot-com bubble. Companies like Just Eat and TripAdvisor got effectively built on the ruins of it. And at the tail end of the global financial crisis in 2008, 2009, you actually had companies like Zalando, Airbnb, and Uber pop up. And we all know that these are fundamentally incredibly strong businesses. And I think you have to bear in mind that crisis obviously gives opportunity. And I think we all know the basic benefits of going through a crisis while you're building a company, right? First of all, there's typically less competition, as most of your competitors get wiped out by being in these tough markets. And if you're building like a marketplace business, which relies on network effects, it actually allows you to go into new markets or consolidate markets and build a highly defensible moat before your competitors come back. So that's a great thing. Secondly, hiring typically becoming much easier in a recession, right? And we all know how incredibly hard it was to hire those great people in the last couple of years. We now see a lot of layoffs happening, and it might become significantly easier now than 12 months ago to bring in that great exec that you wanted to hire but couldn't afford, but it simply had too much other competing offers for you to win. Thirdly, typically the return on your ad spend is going to be better, because also here you have less competition on your marketing. So especially if you want to build critical mass for your marketplace by investing in paid acquisition, there might not be a better time than now. And next to these general benefits of operating in a recession, there's also very crisis-specific opportunities that pop up, right? I mean, we all went to COVID, and COVID did an amazing thing for digitization in general, but it specifically boosted companies that were operating in online education, in telehealth, or even like quick commerce, and it got like a massive tailwind from this particular crisis. So the question I would ask you is, what are the opportunities that you see today where you think you can build a strong and meaningful marketplace? I mean, I know a few of them, which are pretty obvious. I think the first one is everything in energy. I mean, we're all talking about how Europe has to move to energy independence. So it'll be a great opportunity for many marketplace businesses. Secondly, manufacturing and everything related to supply chain. I mean, if there's one thing that COVID taught us, is that these global supply chain challenges are super big and we need to cover them. And we also have this new changing geopolitical landscape, right? So if you're building something great in manufacturing or supply chain, I think you'll have an amazing time in the next couple of years. And thirdly, the most obvious one is obviously everything around climate. I mean, we're in this looming, it's not even looming. I mean, we're in a climate crisis, and this will be an avenue where many great marketplaces can be built. So, contrary to the whole story, this might actually be a great time to build a company. Or as Bill Gurley, famous benchmark investor, recently said in an interview, the truth is that if you're going to build something from scratch, this might be as good a time as you've had in a decade. So with that, I want to tell you, keep building, keep your heads down, build those amazing marketplace companies. While doing that, connect to our team. We're all here. We're more than happy to meet you and back you on your journey. And with that, I would love to hand it over to Julian Teike, one of the great founders in our portfolio building an insurance marketplace. Thank you.